right. Got the social started. All right, let's get started here. Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm. I'll be your host, and today I'm joined with Doug Hagren. Hey, Doug.
Hey, Kirk. I'm halfway here. I mean, I'm on about 4 hours jet lag and from traveling last week. So but happy Father's Day for all those out there that over the weekend. So good to be here.
Yeah, happy belated Father's Day. So where were you, Doug?
I was up in Alaska. Beautiful area, mountains everywhere. I mean, if I can say this to anybody, if you have a chance to try that put that on your bucket list and go at least one time in your life, it is an incredible place. The scenery, beauty. We saw whales, mountains, unbelievable. The water, the waterfalls, hiking. It's just incredible. It's a whole different place. Reminds me of a combination of some of the best parts of like the mountains of California and Colorado and northern Canada and northern Minnesota and Pacific Northwest, all that just slammed together. It's incredible. Recommend it to anybody.
Nice. What'd your wife think of that?
Oh, she loved it.
Yeah, you missed the lead in, Doug.
Yes, I know.
Alaska.
I told you 4 hours of jet lag.
Yeah, I don't know Alaska.
I'm way off. So.
It's all right. It's all right.
Alaska.
I'll give you a pass on that one.
Very slow today.
Very slow for the bad jokes.
Don't count on. Yeah, Father's Day was just a couple days ago. I should be like really polished on these dad jokes.
I got to ramp up my dad jokes. I think AI is getting a lot better at dad jokes. I've seen some pretty good ones lately. So,
hey, which is a good lead-in because I said this last time we talked. AI is getting a sense of humor, and I'm telling you, once AI figures out the sense of humor, especially how to really create sarcasm, we're in trouble. We'll never be able to spot a deep fake ever again.
That's my Turing test. So I know people say the Turing test, you can't tell. I could tell really easily. You just ask it a bunch of jokes. Just say, tell me the joke, tell me another joke. And after like 5 or 6, it runs out of jokes because it's basically pulling it from somewhere.
Exactly.
But as soon as it can start telling a joke, creating jokes, understanding them, explain like all that, that's when you know it's sentient, or at least it's thinking for itself. So that's my Turing test. But anyway,
it's
all right,
coming quickly.
Yeah, so let's dive right in here. So we've been talking about AI for the last few weeks. Obviously, a lot's happened. We had Israel attack Iran, and Iran is lobbing missiles over in Israel. So I don't know how long that's going to last. To me, you got Trump on the sidelines, being just basically just throwing out whammies. Just like, oh, unconditional surrender. Hey, I'm here. I can make a deal. Like, I mean, if you really sit in the sidelines and you don't take offense to any of this, which I know is hard in our day and age, it is absolutely hilarious. I mean, you just imagine if like this is a cartoon, you got two people fighting each other, and you got Trump in the stands, be like, yeah, go, like, hey, I'm here. If you guys need something, I'm here. Like, it's just like it's dark comedy, but it in my own way, I'm just like. There's nothing I can control in this, so whatever. But just the fact this is going on, I feel like I'm living in a dark comedy anyway every day. But anyway, so we're going to get to. I know we talked a little bit about that last week. Certainly, Father's Day was awesome. I had a great Father's Day. Great day with the family. Just a beautiful day out, and just went for bike rides and spent a lot of quality time. So I'm happy. My father-in-law gave me a really funny card, which I'm going to paraphrase it, but it was basically, do you know why Father's Day is approximately a month after Mother's Day? And the answer was because that's the amount of time it takes people to remember they forgot about you. So
it's like middle child syndrome.
Yeah, and the funny thing is, it's like. I gave it to my kids. I'm like, that's pretty funny. I gave it to my kids, and they're like, what do you think? And they're like, we don't get it. I'm like, you will. Like, don't worry, you will. Keep this, and someday it'll make sense to you. Anyway, so that was great. So hopefully everyone else had a great Father's Day as well, and hopefully spend time with their family. We're going to get back into AI. So AI. I'm going to continue talking about AI because the implications of AI are immense. And, we've talked a lot about the best investment in AI is in yourself and how you use it. That will help you professionally. There's a lot of opportunities here. I've talked to a bunch of people who are kind of geeks on it like me, and they're seeing tons of opportunity. And the margin for opportunity is huge right now, and at some point that will close. But right now, you everyone's here, and the opportunity's here, and you've got all this space where there's nobody competing. Eventually, it will close, and everybody will get good at it. But right now, if you're on the cutting edge, you've got a huge opportunity to make a boatload of money if you want. If you're innovative enough and just in your thinking, because you don't have to do it. I think I shared this before. I accidentally created a health app. I meant to create some sort of a prompting system for myself, so I could just have a diagnosis based on how I see the world and what it would give me based on understandings that I think are valid understandings of health. Anyway, it was my own little experiment, and it was like a combination of traditional medicine and functional and holistic medicine. And it was more like let's have a holistic view, like let's take it all in and get different opinions, which really nobody really does nowadays. So anyway, it was my idea, and it was for me. I wasn't going to sell it anyway. So I'm prompting AI to do this, and all of a sudden it just creates an app. It just created it for me right in the middle. It's just like, hold on, and it like starts coding. I'm like, what the hell is going on? And it spits out this interface, this web interface that I could go and use, and it gave me a great result. And I was like, what? WTF? Like it took me half an hour to 45 minutes to create this damn thing, and I did it accidentally. Imagine if I really wanted to do something. Like imagine. Like, and so I think the challenge that most people have in AI is our limited imagination, right? And this is hitting me all the time. So I'm working on this with some other people, and they're more ahead of this than I am. So they're teaching me some stuff. And one of them is just like, you're getting restricted by your imagination, like your lack of. It's like you're thinking like the industrial age, like it has to be done a certain way. What if it didn't? Like we're using spreadsheets. What if you didn't need a spreadsheet? What if you just fed it all to AI and it had this stuff? Like, why do you need spreadsheets? And so it's not that they're not important. It's that like someday spreadsheets might no longer be a thing because we don't need them. Like all of these constructs that we've created in our culture and our economy and companies are based around what has existed prior to this. But what if none of that matters? What if I'll give you an example. So take China, right? So the US has evolved. We've been the leading economy for 70 years plus. Like we've been leading the world in many technological innovations and advancements, and we have a culture of that in our society. Not every other country has this, like rule of law, property rights, IP, like all this stuff that we built in has allowed us to become an innovative economy and draw people all over the world to innovate here instead of there. So we have that, which is great. And that has allowed us to innovate in many different ways. Okay. I totally lost my train of thinking and going that line of thinking. But so we are an innovative economy, right? And we have this. Where was I going with that? Jesus, I'm just.
Hey, which one of us has got the jet
lag? I don't know. I got the jet lag apparently. I had to get up really early to drive my son somewhere, and it was against my grain. I'm a night owl, and I had to get up real early. Anyway, but I'll come back to that. But the point I'm trying to make is we're innovative in general, but we have this thinking about the economy and how things work. And when we disrupt that, like we come up with something that disrupts it, everyone else has to readjust, right? Like we used to have slaves picking crops, and then we came up with machines that pick the crops, so you no longer need slaves, right? I'm not getting into the slavery thing, but point being is like you had human labor, and then you had machines do it. Now you have humans operating the machines, but there'll be a point where you don't even need the humans because the machines will do it all themselves, right? So you have this evolution which changes everything, right? So we have AI that's completely rewriting how business works, right? So you're accustomed to doing certain things. What if you don't need any of that because AI will do it all for you and it will just do it? Now, AI is bad at math. I just found out AI is really bad at math. So do not trust it to be your CFO. Although it's really good at most of the CFO jobs. What it's not good at is the math part. So you need someone to check that, which maybe it'll get better. But and I'll just side note, the LLMs are word based and they're prediction engines for what's going to come next. It's interesting that they're not always good at math. Now, I haven't seen evidence of this, but everyone has told me this, that you can't trust it for math. Like you have to check its work. Like it's generally accurate. It's pretty accurate. It's, you know, if it's 90, 95% accurate, that 5 to 10% matters. So my point is you'd think it would be simple because it's a computer, but it's not. So everything we know about AI is different. So you have to think differently about the application of it. So how to use it? I don't know. Like I'm still learning all these new applications. Like how do you think about AI? Well, I used to do this. Well, maybe AI can do that. Oh, like I'll have AI be my CMO, my chief marketing officer, my CFO, right? Like it can do a lot. It's not 100% there. And I'll just advertise it's not 100% there. It's like 90, 95% there, but that's pretty darn good. That's better than most employees. So I would once again continually suggest going down that rabbit hole and doing that, right? It you know, AI can help with hiring, it can help with CFO work, it can help with CMO work, it can help with operations and processes. Like I haven't seen anything that it's not good at yet. Now there are applications where it's not there yet. Like it can answer phones, it can have a conversation with you. I've seen that. There's a few companies that have come out with that, which is pretty cool. I'm not sure it's a good salesperson, or you know, if you need someone on the phone to sell, like it's not there yet. But that's about the only application right now that it can't do, at least 80, 90%. So I think what the interesting role right now for people in a profession is the operations and the project management of AI and how you apply that to a company. I think that's the piece where there's a huge margin of spread of value that somebody can bring to the table. Now, Mary Meeker, who I can't remember, she was at Morgan Stanley, I think. I forget where she was before, but she had this report. It's called the Artificial Intelligence Report. And she had a bunch of different areas. I'm just going to pull out the main pieces. It's like how many pages is this? It's a 340 page one. So I don't want to bore people to tears. I'm not going to go over it all, but it's really interesting. And for those of you data geeks, you're going to love this. So here are some of the main takeaways. The AI user adoption is unprecedented. ChatGPT in 17 months went from 0 to 800 million users weekly. Netflix took 10 years to get to 100 million. The time to get to 100 million was 2 months for ChatGPT. TikTok was 9 months. Instagram was 2.5 years. Global adoption of ChatGPT is 90%. 90% of users are outside of North America by year 3. The internet took 23 years to reach this level. China was behind, but catching up quickly with DeepSeek. It went from 0 to 21% of global LLM share in just a few months. Their models are achieving similar performance at lower costs. So, you know, the point being is there's a phrase where when China enters the room, profits leave. The interesting thing about China is DeepSeek, it was not a better model. It was a dramatically lower cost. And I forget the amount. It was like 80 or 90% less the cost of like a ChatGPT. So interestingly enough, like what's the value of any of these things? And this is what we've been saying, is that the value of a ChatGPT or Anthropic's Claude or Grok or any of these, in my opinion, the value is zero, because they're all competitive, they're all commodities. And frankly, if they all find a plateau, and I'm not saying they will, but let's say they find a plateau, right after that is going to be the self-run LLMs. You're going to have your own, and it's not going to be run by Google. It's not going to be run by, you know, X. It's not going to be run by Microsoft. It's going to be run by you. So from my understanding, from all the smart people I've talked to, Like you're going to have your own LLM in the future, and you'll be able to write it, you'll be able to teach it and train it, and you'll be able to tell it, no, I don't want the founding fathers to be of different ethnicities because they're obviously all white men. You're not going to just make it diverse for the sake of being diverse. Like you're not going to have that pollution of other people's values onto your own. You'll be able to create your own LLM with your own values. That part I find really interesting. So I think that the adoption for LLMs, the cost is going to go to close to zero. It won't be zero, but it'll be close to zero because the costs are going to shoot way down. Token costs have collapsed 99.7% in 2 years and continue going down. Imagine that. The costs for this have declined almost 100%. It's basically, this is in 2 years, it's going to keep going. So it's going to be close to zero for the cost of these things. And as energy becomes cheaper, which it will, it'll even get cheaper. So NVIDIA's GPUs have 105,000x less energy per token in the last 10 years. So that's going to keep progressing. What was pennies is now fractions of a penny, which, by the way, I don't know if anyone realizes this, they're getting rid of the penny. So for those of you who didn't know this, collect your pennies because they will be collectibles because they're going away. Pennies are going out of circulation. I think, was it July, Doug? It's coming up.
I think that's about right.
Yeah, it's coming up soon. All right, a few more points and we'll head off to Doug. So these curves are not like the typical SaaS models. SaaS models are a lot slower than this. This is rapid pace. The open source, so Meta has Llama. It's open source, is 1.2 billion downloads in 10 weeks. Hugging Face has 1.16 million AI models, 33x growth since pretty much in the last 3 years. 100,000 derivative models built off Meta's Llama alone. Let's see, basically the gap between open and closed models is closing rapidly. This is what we were saying. DeepSeek scores 93% versus OpenAI's 95% of math benchmarks. The point being is the performance difference is negligible. And as we have been up until somewhat recently, we've been in a connected, interdependent connected technology base. Like everyone had to use Facebook, everyone had to use Google. But with blockchain, we've become decentralized, right? We were centralized, now we're becoming decentralized. I don't need to use a dollar. I can use a Bitcoin, or I can use, call them shit coins. I can use whatever, right? I don't need to use ChatGPT. I can use Meta's Llama, and I could create my own. All of these things are becoming decentralized, which in my opinion is a good thing. That's where innovation comes from. People creating their own stuff, coming up with the best models. Centralization causes free speech restrictions, all the stuff we saw during COVID, all the bad stuff happens from centralization, right? Centralized governments, centralized information, communications, all of that is not good. You need to have diversity of thought, diversity of opinions. That's what makes us great, because no matter how crazy somebody is, I still want to hear them, because you're going to obviously know that that person's cuckoo, and they're going to show themselves to be cuckoo because you're going to let them talk, and you're never going to pay attention to them again, right? The whole point of free speech is that everyone's allowed to have it regardless of your opinions, and no matter how wrong they are. And that's the First Amendment, and the most important one, because everything else after that doesn't matter if you don't have that. All right. So anyway, off the politics. So next, 2.6 billion users, internet users, will be AI first. So people are changing their habits. They're using, there's some reports came out, said most employees are using ChatGPT personally, but not for company use. And they're using it to make their lives better at work, but they're not, so they're using ChatGPT to do the work themselves, which is good. So it's giving people more free time. But at some point, work will use it, and it'll just compress like the internet did. Doesn't make our lives easier, just makes us more efficient at doing more work. For our quality of life will not improve. So that's an important factor to keep note of. She talks about the great reshuffling of AI job postings are up 448% versus traditional IT jobs, which are falling. Non-AI IT jobs are down 9%, while the 448% AI job postings are up. AI-related job titles up 200% over 2 years. 60,000 new titles created. And the meta lesson she gives is speed is everything. So effectively, all these trends point to one conclusion: the technology cycle is there's a technological flywheel that's been going on for the last like 30 years or 40 years. Now that flywheel is spinning up faster. AI is moving it faster than anything we've ever seen in human history. And here's the problem. Well, one final point, and I'll give you the problem. So the companies that are adapt quickest will capture the biggest disproportionate value. So you just got to get on it. That's the result. You just have to get on it. Now, here's the thing, and I've said this example many times, but I'll say it again. Imagine for a moment, we're in the Stone Age, right? You just invented fire, and an alien ship crashes right next to you, right? You don't know what it is. You're like, what the hell is this thing? You go in there and you find a laser gun. You start shooting your friends with it. Like, when you have this evolutionary shift that you're not equipped for, you do a lot of stupid things because you don't understand it. You didn't create it. You didn't evolve with it. It wasn't a part of you. So you've got this power, like maybe you blow up the whole planet with the spaceship because you touched some button that you weren't aware of, right? Like the point being is like, clearly there's a big evolutionary difference between a spaceship and cavemen. Well, what if a spaceship landed today? There's still an evolutionary difference. Like, the power generation, like all the stuff that would be involved to make that happen. And if you didn't earn it, and here's the key: if you didn't earn the knowledge, then you don't appreciate it. You don't appreciate what it took to get there, and you don't appreciate the danger that it causes. So AI in itself, so like nuclear, right? Nuclear weapons, the atomic bomb. We created that, and we dropped it, and it killed a lot of people, and no one ever wants to do that ever again. It was really bad. You get into the ethics of it, but the point being is it caused us to have peace for the next 75 years because no one ever wanted to do that. So if you think about it, AI, we've hardly adapted to social media. Our kids are zombies on social media. They stare at the screen all day, and they're polluting their minds with garbage that's on social media. It's a terrible thing. Right? It's not saying it's all bad, but 95% of it's bad. It doesn't help. It doesn't make you a better person. It doesn't help your life. It's an echo chamber that just makes people angry and stressed and anxious. So if you think about AI, we've had 10, 15 years to adapt to that. How about AI? We're going to have no time to adapt to this new technology that I'm not going to get into the craziness, but AI could lead us into Skynet and Terminator Land where it tries to kill us, or it turns into Star Trek where it does all our work and we just walk around and think and explore the galaxy, or somewhere in between. Like, we don't know. Like, no one knows. The smartest people in the planet right now on AI don't know this. So we don't know and we can't predict, and I'm not going to try. But what I do know is that the adoption of this rapidly evolving technology that we can't stop because we're afraid China will take over and we'll have this and we won't. And there's this competition going that's going to potentially destroy, all humans. Like, potentially. I'm not saying it's 20%, let's say, of that happening. So we have this problem. It's like a nuclear arms race. Like, what are you going to do? Like, someone's got to come to the table and stop this before we hit the no pass zone where AI becomes sentient and then we can't stop it. Like, there has to be some coming to terms with that. But between now and then, there's going to be a lot of evolution. There's going to be a lot of change. It'll be a lot of benefit to society until a point where maybe it isn't. Maybe it takes jobs. So the understanding is everyone's on the same page with this, is that this is rapidly growing and you need to stay abreast of what's going on, and you need to be constantly training yourself in this because it evolves all the time. Like I said, I didn't even know it could code, and it just did it for me without me even asking deliberately. It just kind of started. So understand that you probably understand how to use it. It's probably making your life better, but at the same time, there's so much more that it can do that you're probably not realizing. And the sooner you have this this education, understanding them, and the sooner you adopt it, the better your life's going to be, and you'll be able to close the gap a lot quicker. So, Doug, I don't know, what are your thoughts before we get into real stuff?
Well, a couple things. First of all, the penny, they're looking at phasing out early 2026. Okay. Second of all, this was really interesting because it made me think. I was total tangent. I was up in Canada, and we had a taxi driver drop us off at the airport, and he said, two things he said, which was really interesting. It just tells you about the perspective of the rest of the world to America. And of course, we all know what Americans think of the rest of the world. We have a lot of things, a lot of knowledge lost there. He said, I just found out. He goes, I didn't realize that America has a $2 bill. When did you get a $2 bill? Like, we've always had a $2 bill. He goes, and then after that, he goes, the one thing, Americans don't seem to have that we use up here is debit cards. I'm like, what? So very interesting. Just made me think of that with the penny going away. And, okay, so, the rest of the world, or at least in certain places, they never knew we had a $2 bill, and they didn't think we used debit cards down here.
The 51st state has a long way to go, Doug. The 51st state has a long way to go.
That's right. Evidently. And the more north you go, I was in Saskatoon, so we were getting further and further away from the border. The whole, practically over the top of the world, to the other side, right? A couple of things. Yeah. I mean, you were going to the AI side of it. And this is, there's an interview that recently happened, and some of the things that just kind of, add on to what you said is where does a lot of the challenges potentially going to be? Knowledge workers and white collar jobs, things like legal assistants, customer service reps, analysts, similar roles are being automated. One CEO cited a reduction of staff from 7,000 to 3,000 due to AI agents now handling 80% of customer service. I don't know if that's a good thing because customer service was bad enough before. AI can answer little things, but when it comes to actual problem solving, I mean, it comes a point where you're in a loop. But I guess if you can still say, get me to a manager, then maybe that'll be the line that still has humans for now. Workers with jobs that can be AI augmented, they're looking at a 5x productivity with a task time cut from 25 minutes to 5. And that does not lead to higher wages. That's fewer workers needed. And so that, can exacerbate the concerns over a major wealth transfer. I mean, the owners of AI, they're going to get richer. Companies have an obligation by law, especially if it's a public company, to be profitable, to do things in the best interest of its shareholders. So guess what? They're going to invest in things that make them richer, even at the demise of displaced workers. You talked about what AI can't touch. I think, again, physical skill sets, right? AI at this point in time can't be a plumber, right? So, physical jobs with dexterity, those are going to be hard to automate with AI. But white collar jobs, originally thought safe, are going to be more likely exposed. And that's, I think, another thing. And I'm seeing this already. We're starting to see, there's new data coming out that there was a tremendous number of companies, almost 50 to 70% of companies did job layoffs in May, and they're expecting more in June. And when you start to listen to people that are going through that, one of the things that happens that is a social dynamic is the dignity crisis. When people are looking for jobs, people have so much invested in their careers and their identity. If we get to a point, we've talked about this before, people are talking about universal basic income. And if that, I still think that contributes to inflation because everybody has income. Look at, 2020. If you have income, that doesn't, that just means that everybody can then spend. That just drives up prices. The more liquidity against supply, that's an issue. So maybe it fixes a starvation issue, but loss of purpose, we already have a lot. And a lot of people would argue, Kirk, we've got mental illness issues in this world, and COVID exacerbated a lot of that. Well, if you take all of these people, and I think COVID was a precursor to this, people didn't have anything to do, and we saw an evolution of crazy. So if you get to a point where now more and more of the world has a loss of purpose from mass job displacement, look at just an exacerbating possibility of nasty societies. mass incarceration, things like that could, these are things that they are potential, they're predicting could happen if people basically have nothing to do, no hope. And you do see this in societies where, I'm not going to state specific demographics on this, but there are areas where people receive basically a basic income from their community. And if you look at those communities and you look at the impact and the people that are receiving that, there is a sense of hopelessness when you go through those communities that you can see where people just, there's no purpose of anything. And so, I think, one thing, on a positive side, I think, just to kind of go back on that, AI systems are immortal, right? Human knowledge is something that dies with us. We talk about, the last survivors of the Civil War, the last survivors of World War I and World War II, and what the knowledge they could pass. AI doesn't. So, I think the issue, good news is we'll have information, will be able to be sustained. But they're also saying that, and again, there's doomsayers either way. There's lots of people that talk about, you talked about this a couple of weeks ago. There's, people are talking about the birth rate's declining. That's going to be a problem, right? We're not producing enough baby. Well, guess what? If we don't have enough jobs, we don't have enough things to do. If AI takes away with it, this may not be as critical to society survival as some people are predicting, because there isn't going to be enough for the populations to be able to do. Things become more efficient. But they are talking about, the systematic upheaval of economies, societies, and there are people that are predicting that a risk of extinction, 10 to 20%. Okay. Again, these are some extreme notes that go in a couple different directions. But I think, I think it's important for people to understand what are some of the potential areas in which this, evolution of AI could have tremendous impact. But I think above anything more, it's going to be right here. It's going to be psychological. And in any time, you just look at some of the older generations and how they've talked about technology change, right? And for them, technology change was, as simple as, okay, the first TV. Oh my gosh, look at this, information's coming through this screen. And it was psychologically, it was extremely impactful just to have that. And then we move forward, we move forward into the evolution of technology and automation of the first personal computers in the 70s and 80s. Now, I forget what it is. I don't have the data on it, but even just 5-10 years ago, they were talking about the exponential evolution of technology. That's all changed already. Like with AI, everything is just blowing up from an exponential basis that the human mind cannot comprehend and keep up with what you thought, what was working yesterday. And you talked about this several weeks ago, Kirk. When we talked about marketing and we talked about AI taking over the ability of algorithms and Google, and pulling back from the massive drop of subscribership. By the way, I mean, I've found that you can actually use AI to analyze articles behind paywalls. It's like, okay, you got to pay this. You got to pay to read this article. Drop the link, summarize this article for you. Here it is. Like, I don't even need to pay. So these companies like you've got some information on Business Insider, massive layoffs coming because of revenue drops. They're not making the money on this. So as Google is now going to control this AI, or these players that are at the top of that pyramid are going to control the information in the AI, you're looking at a situation in which the information is exponential development of that information that is happening so rapidly that what was working today, what was working just a month ago in terms of reach and information, we can't even predict what it's going to be in 3 months, 6 months, 2 years. And we have ideas for it. All we know is it's going to be transformatively changed. And I'm going to segue this back to something that we can go on. But when we start to look at issues that we're already seeing, rising credit card debt, rising, student, delinquencies. And this is when people were employed, right? We came out of COVID with some of the lowest unemployment that we've had in history. I mean, it was down to like low single digits. Everybody was working. People, companies couldn't get enough employees. They were paying above and beyond to try to get employees in seats. And yet, here we are, a year removed from that, and we are seeing all of this incredible levels of financial negativity that are happening in households as we're starting to go into an abrupt reversal of, above average, historically high employment to potentially disrupted unemployment that will potentially never recover. I mean, with AI, there will never be a reason to bring them back. What does that do economically? By the way, we just saw, and this is the last thing I'll say on this, if I can find my data on it, but we just saw, I think I've got it right here. Yeah. For the first time in history, where was that information? I can't find it. At least going back, this chart went back to the 1990s. It didn't post my picture, but the top 1% now have more income than the bottom 99%. I think that's the data. I'm going to try to find that here for it. That's never happened before. Right? So when we talk about that separation of the ultra wealthy from the rest and the collapse of the middle class, we've never been to a point where we're at right now. And this is before the majority of potential AI disruption occurs.
Yeah. I mean, we've said this a few times in the show before, but I'm a free market capitalist. I don't agree with the concept of, of this universal basic income, but I understand. It's, you have all these tech bros talking about, oh, universal basic income, everyone's going to be a slave to the big tech. I understand now why it makes sense. I don't agree with it. It's against human nature, and any sort of system that is against human nature, I'm against, because if it's against human nature, it will have friction and people will fight it and it will have problems. Capitalism goes with human nature. You might not agree with it, but it is our nature. Right. And you don't like our nature. Yes, we also hit each other in the head with clubs too. That's also in our nature. We're warlike species. But at the same point, it needs to go along with our nature in order to survive. So universal basic income goes against our nature. And I think that's going to be problematic. But I understand, because you can't have a bunch of unemployed people, or it's going to look like some of these bombed out towns that used to be in the industrial age, really thriving places. And now everybody's on drugs and they're all on crack because they're destitute and there's no hope and all this stuff. I understand there's examples of it, right? You don't have to like it. It's just the reality. So I think, I don't know where this ends up going. I think it's going to be disruptive in a major way, and people who want power will in some ways be able to retain it. But this is why the decentralized nature of having your own LLM is going to be really important. So you can't have people trying to persuade you and telling you what to do. You'll have control over your own brainwashing, not let someone else do it for you. Anyway, we talked a little bit about AI. I want to talk about some other stuff too. We'll keep going into AI because there's so much that comes out all the time. And by the way, if anyone's interested, I'm probably going to do a workshop on this in late summer. So if you're a business owner, and you're looking to apply this to your business, just shoot me an email, kirk@innovativewealth.com, and let me know, and I'll put you on the list, because we're probably going to do a workshop in the next month or two on this and helping business owners, because there's amazing things you can do to cut costs and time on your business, and even you don't have to hire new people. You can have AI do a lot of this for you, and I can show you how to do that. So anyway, if anyone's interested, just let me know, and I'll put you on the list. All right. So, all right, let's talk about a few things. So Doug shared a few charts. I'm going to share one here. Cost of buying a house with a mortgage. Okay. This is basically from the 50s till now. The mortgage payments, which obviously is through the roof. Something to keep in mind here. We've been talking about this for a while, and it's still early, but I do expect at some point in the next, we'll call it 2 to 3 years, if rates start to drop, I have a thesis and it's still a thesis, just like my other thesis, which turned out to not necessarily be correct. But my thesis before was, well, interest rates go up and home prices go down because that's how things work in a normal normal market economy. But unfortunately, we don't live in a free market. We live in a manipulated market. So as rates go up and interest payments go up, so do home prices. That doesn't make any sense. Well, people said, well, it's because of supply and demand. Okay, maybe that's true. But if that's true, then lowering rates would free up a bunch of inventory for people to sell, because now they can sell, because before they couldn't. Now they can sell. So that should flood the market with supply, which means that's going to overwhelm demand, which means that should drop the prices. So if these supply and demand people on real estate are correct, then lowering the rates should flood the market and should cause real estate prices to drop. And actually, they are right now, even though rates haven't dropped, but the real estate has come down because that COVID era boost in home prices come off in places like Texas and like Florida, who are overinflated. Now that's really starting to crack. I don't have the numbers for what it's down, but rents and prices are down in Florida in many parts and in Texas. So just something to keep in mind. But so the housing is going to keep. Here's another chart here. Right now, there's more sellers than buyers, and this is a relatively recent thing. I'm not sure I necessarily want to draw the conclusion that these are highly correlated, but there's enough correlation where that should line up relatively soon. But there's a lot more sellers, which means prices should drop, which they are. So, that maybe that is the answer, and we'll find out. We'll find out in the next few years, depending on where interest rates go. I know Trump wants 0% interest rates again. The Fed came out this week and said, no, we're not dropping rates, but they're still on track for dropping them twice in the remainder of this year. They just didn't say when. Now, I'm still wondering why you're dropping rates if the market is close to all-time highs. Why are you dropping rates? That, to me, seems stupid, especially if we have potential inflation in our future, which everyone agrees we do. So,
well, and thus far, Powell has stayed pretty firm on that thing, it based on that argument, because there's certainly a lot of political reasons they're trying to get him to drop that make no sense.
Politics, I agree with. And before the election, when when Powell dropped rates a lot, right before the election, I thought that was politically motivated. And no one said this, but to me, it was just so obvious, and it was just awful. The Fed tries to be independent, and they weren't. And so, if I was Trump, I'd be pissed. But
well, nobody said this.
Yeah,
but
we did. We said it. I don't care what party you're on. Like, I just care what's the right answer, not what's the partisan answer. So, I also don't think Trump should be forcing to drop rates. So, I'm not partisan on this. I think they should have been where they were before, because we're going to have an overinflated economy relatively soon, depending on tariffs. But those should be rolling off soon. So we'll see. Maybe they'll keep extending it, which is probably the likely scenarios. They'll just keep extending the tariffs into the future until they can negotiate. Or if they decide not to negotiate, maybe they'll allow Israel to attack them, like what happened last week. I had not been following that closely, but I guess there was some sort of a 60-day window where Trump's like, all right, you got 60 days to come to an agreement. And on day 61 is when they launched their attack. So I don't know if that's true, but somebody mentioned that. I'm like, well, okay, I give Trump credit for, even though technically we weren't involved, quote unquote, for those audio viewers. So I don't know where that's going, but it certainly, there's still a lot of influx. Nobody seems to care. Like the markets, I was looking at the markets after what happened with Israel, and I'm still scratching my head like, did that actually happen? Like, did somebody attack somebody else? Like, what's going on? Where's the? I'm going to bring up this chart to let's see, share some of the daily stuff here so you can kind of follow along. This is the S&P 500. Obviously, the tariff thing didn't go well, but like, oh, there's a war happening in the Middle East. What happened? Nothing. Not much. When did the Ukraine war start, Doug? Do you remember?
2-3 years ago.
Yeah, was it like right around here? I feel like it was in January sometime, but it was basically the market went down,
Yeah.
then it came back, and no one seemed to care because it was like, well, it doesn't
4
really
years.
impact the U.S., so well, whatever. Same thing here. Like, where's the drop? There's nothing. Like, no one cares about the Middle East.
No.
Obviously a lot of people do, but from the market standpoint, is what I'm saying, nobody cares, because from the market standpoint, this should have been a mess. But what happened? I mean, we've had more sell off today. I mean, here is this it? The 13th. So the mark. So look at this. So here's the 12th.
Are you showing?
Oh, I'm not.
Are you trying to share?
Oh,
Nope, no, sir.
okay, sorry.
There you go.
All right. So let me go back here. So this is the S&P 500. I don't know where the Ukraine war started. My guess is probably somewhere here, but I thought it was January. So anyway, but you look at this, the Trump tariffs. Oh my God, look at that. Everything sold off. But then you look at what happened recently. Well, what happened? Well, here's the 12th, and then the 13th started up high, and then dropped a lot. So it's like, wow, what a big drop. Was it? Like, there's nothing. You wouldn't know that there was a war going on in the Middle East if you looked at this chart. Look at, look at that. Does that indicate a war? Like, I can't even tell. It's crazy. So I guess my point is, I guess if you look at energy, you'd probably see a little bit more. Like, okay, there's obviously a big spike in energy. People are worried about, but okay, I could see how that price would rise, but shouldn't that spike to like 100? But it went up $5, not even 10%. Like, okay, I'm baffled by what's going on in the Middle East and how it is having close to no impact on public markets. It's shocking to me that virtually nothing has. I mean, okay, the bond market, okay, the 30-year went down, but I mean, realistically, there haven't been really any big moves because of that. So I'm a little shocked that not much has happened. This is today, which okay, it's today, but I think actually the markets are closed. So this might be as of yesterday. Maybe they're closed because no one wants to take risk over the weekend. But I mean, you look at something like this. Okay, that's Bitcoin. Nothing really happened. You look at futures. You look at gold. Gold actually spiked a little bit, I believe, on that day. So there was a little bit of action in gold on the 13th. I get that, but it's come off. So what's really happened? Nothing. So anyway, I'll give it back to Doug. But I'm still confused. I want to know what's going on with the market. Are people actually running the markets now, or is it just computer algorithms? Because no one seems to care about any sort of fundamental stuff. And maybe the takeaway is that fundamentals no longer matter. Earnings don't matter. World events don't matter. All that matters is the Fed printing money or are they not printing money? Maybe that's all that matters. Because China started printing money, Europe started printing money, and oh look, their economies started to take off. And the U.S. isn't. The U.S. is actually the money's getting shrunk at the moment, at least until the big beautiful bill comes out. Then we'll get a big boost. But at the moment, like I wouldn't be surprised if the market drops right before the big beautiful bill goes in, because hey, that's a good incentive to kickstart the economy again. I don't know. I wouldn't be taking a whole lot of risk here, but certainly. As long as they're printing money, the market goes up. If they're not printing money, then it's anyone's guess. So I don't know. It seems like a very simple game now, where it should be complicated. And I think what people need to take away from this is, how should you invest? I think you should have a risk management in place right now. Just because I think I don't know what's going to cause the markets to throw up, but apparently not what's going on right now. So. We got a few minutes, Doug. You want to give final thoughts and then take us home?
Yeah, well, I think it's a perfect segue because if you look at, and I don't know if this is a chart you talked about the last week or so, but you had a chart out there about that you had found about the relationship between U.S. inflation and stock bond correlations based on different events. And if you take a look at it, if we were looking at the 2010s, inflation was low. right? About 1.1 to 2%. And stocks and bonds moved inversely. There was negative stock bond correlation. It was great for, at that time, for 60-40 portfolios, which is, still, I mean, I've talked to people every day. It's what their advisors recommend. It's what they should be in. It's what most of your moderate kind of allocation portfolios are still built around. And that negative correlation allowed traditional portfolios to benefit from bonds acting as a hedge when equity sold off. But as inflation rises, that correlation turns positive, and stocks and bonds move more in the same direction. And that's going to mean that stocks, when stocks drop, say due to inflation-driven Fed tightening, well, bonds are going to often drop too, and that means no hedge. So where are we now? Well, the latest information kind of shows that we have re-entered that high inflation regime with positive correlation, and equities still remain expensive, which, as we've said before, echoes in a way 1970 style risk when stocks and bonds struggled together. That means diversification is breaking down. Bonds aren't cushioning equity volatility like they used to. Valuations are stretched. Inflation remains sticky. That means that if you're out there taking passive risk, it's more dangerous. And I talk to people all the time that they're so used to what's been going on and how to allocate the last 10, 15, 20 years that it's hard to disconnect and change that philosophy because they look at what's been working. But what's been working doesn't necessarily work now under current environment. So traditional models, 60-40, glide paths, they could be very structurally flawed in this environment. And that means now, if you're an affluent investor and you're relying on balanced portfolios and passive and listening to this, just go ahead and buy the S&P 500 and passive investments, your college, your retirement, your legacy planning models based on those, long-term negative stock bond correlations must be reevaluated. By the way, Morningstar just came out, and if anybody's familiar with the 4% rule, it's been widely accepted as the math on what kind of income that you can use in retirement to sustain your portfolio and not run out of money. Raise your hand if you want to run out of money in retirement. Okay. Well, if you don't want to run out of money, the math that they've come out with now has reduced the 4%, which is how much you could take per year, down to only 3%, 3.6. So Morningstar, who does all that analysis on investments, is now saying exactly what I'm saying here, that these long-term stock bond correlations have changed, need to be reevaluated, and that you're going to need to potentially take less money than you thought you did. You need to consider new uncorrelated assets, alts, private credit, commodities, things that are index-based, annuities, life insurance, etc., or more tactical hedge structures that don't rely on old assumptions. Okay? And so this is a time where you have to have a market shift. So in today's environment, the old rules are breaking down. Stocks and bonds are moving together again. They offer less protection. And now we talk about AI rapidly eroding job security, shrinking the middle class, and reshaping how wealth is created and destroyed. And in that world, if we talk about things like college planning or retirement, it's not just about tuition, it's about survival. It's about protecting your capital. It's about protecting your cash flow and your long-term legacy. High-income families, those of you listening to this, face a unique danger. You're going to spend more most often. You're going to qualify for less aid. You're going to need more. You're going to spend more in retirement, meaning you're going to potentially use a higher percentage of your assets and need those assets to keep growing. And by the way, home prices are dropping. So you look at that equity that people have been building, and that was going to be a huge cushion, especially for baby boomers. And so what happens, they often gut their financial momentum without realizing true cost. So at Mergent, my company, Mergent Advisors and Mergent College Advisors, that's MERGENT. We help families think bigger than 529s, bigger than student loans. We look at building tax-efficient strategies to preserve liquidity, protect compounding, and align college planning with real wealth planning. So if you're serious about funding elite education and making sure that you're not blowing up your retirement or triggering tax landmines, visit mergentadvisors.com and mergentcollegeadvisors.com, because smart money doesn't guess, it plans. And I want to clarify, Mergent is MERGENT, MERGENT, mergentadvisors.com and mergentcollegeadvisors.com if you're specifically looking for college. But either way, this college planning is retirement planning.
Awesome. Well, thanks, Doug. I know there's a lot of changes going on in the college space, and I appreciate your expertise here. And we're going to wrap it up here in the interest of time, as it's a holiday, yet I'm working, so we're gonna get back to it. So that's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name is Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on the show. Please remember to subscribe to the podcast and the podcast app of your choosing. You can also check out the show at moneytreepodcast.com. On the website, you'll have access to the show notes, resources, and the archive shows. Also, check out our YouTube channel. When there, please subscribe and leave a comment. Lastly, please leave a rating and comment in the podcast app of your choice. Oh, and don't forget your own research. This show is for informational use only. We're not telling you what to think, merely how to think about investing. We're also not selling any products or services, so do not consider this advice. If you have any problems with the show, I blame Putin. Please send an email to express your feelings. If you're seeking financial advice, talk to an oracle or a fortune teller, or maybe just a licensed financial advisor. I'm one, but as I said earlier, I'm not selling anything, but I'm easy to find. Have a great week ahead, and remember, no one will care about your money like you do. So invest